Hey everybody, hopefully you're having a good day. Hopefully you're relaxing. My name's Andy. My channel's Finding Value. If you like making money or need more help making money, this channel's for you. Subscribe. Give me a thumbs up for the content if you like this content. Today, I'm going to go over ratios. And ratios tell us relative value. It tells us things when ratios change as well, like the market conditions and the environment that we're in. So it's important to understand ratios, how to use them, value them, and they provide much value in the ability to buy and sell because it tells you the value. So if you know how to use ratios and you know what the values are, then you know what the undervalued assets are. Then you know when to sell assets as well. So you know when to buy and you know when to sell. I have found that using ratios and knowing that value is really where I make the majority of my money. Because when you understand this, you can start piling into the undervalued assets, and then you just wait. And if you understand market conditions, you know when those conditions are changing to revalue the assets, and you just wait with your investments. So let's see what the ratios are telling us. So I've got a presentation here on ratios and some current data. So ratios tell us value. They tell us value in relationship to history. They are our guide to investing in undervalued assets. That's what tells us what's undervalued. First, I want to look at the gold to monetary base ratio. And this is the gold to monetary base. This is how many dollars base money there are in relationship to gold and the price of gold. Look at this relationship. It's way down in undervalued land, which means that they've printed a lot more money than what we have accounted for in gold. So this is very good time to be buying precious metals, I think any precious metal, because of this ratio, showing us that they are creating money at a faster pace than gold is accounting for it. And eventually, when the market conditions change and people panic into gold, this will change quite rapidly. And I think that's coming in our future, and especially during a commodity boom, which is coming. So I think this is a good spot to be hiding out in. Commodities, precious metals in general. Here is the oil to gold ratio. When the ratio is a high number, it means oil is cheap. When it's a very low number, it means oil is expensive in relationship to gold. Now, we had this anomaly here that went way up in early 2020. It went negative. But the ratio went all the way up to 90-something hundred. It's off the charts. A very cheap ratio is 30. I mean, that is where I consider to be like extreme cheap for oil. So on this channel, we like oil because of the relative value in relationship to all the other commodities and to gold. And gold is our proxy. Gold's kind of our gold standard. So oil is dirt cheap. Now, what's the current ratio? This is what it looks like currently. You can draw some trend lines in here. But if you notice, if you draw this trend line in here, coming through, it's right at a breakout point for oil. Right there. So we are at a cheap valuation of 30.66, which is very cheap on a historical basis. And we're right there at a breakout. And if this thing breaks to the downside, you might see oil run quite a bit. Because when these ratios, they tell you things. They tell you when it's about to break a psychological point. When it breaks that psychological point, I think this thing's going to be moving at cheetah speeds. We got a bolita on our hands. And I always refer, I know some new subscribers must be like, this guy's crazy. He keeps talking about cheetahs. Cheetahs are when you break the psychological containment of a chart pattern, they are free to run. And we have invested in a lot of companies with great chart patterns, very large ones, that have returned very well when the chart patterns break and the prices really run after the chart break. So I think the channel, we like talking about cheetahs and bulls. A bull and a cheetah together is a bolita. I kind of just made that up. But yeah, this thing's about to break out. I would be watching it. If it breaks to the downside, this ratio means oil is going to outperform gold, and you could see some fireworks go off in gold. Now, this is uranium. I took this just to show you in a historical basis, right now it's up at 62 pounds to 1 ounce gold, which is off the charts in terms of uranium being cheap. I see extensive value here because it's so cheap. It is an anomaly. It is a fantastic area to be looking into for investments, uranium. And at bottoms, this ratio goes all the way down below 5. So it goes to extreme valuations on the opposite side. So if you're at 60 and it goes down to 5, that's a 12 times increase on the price of uranium, or a 12 times outperformance of gold, I should say, of uranium to gold. That 12 times outperformance will manifest itself in the uranium mining companies. And the uranium mining companies, they are very much leveraged to the price of uranium. So you could see drastic movements in the uranium mining companies. I mean, unfathomable returns. Here's platinum to gold. This is what a historical look at that ratio is. And when you look at this, it's bouncing mainly between, I'd say, a little bit below 1 and I'd say about 2. Anything above those and outside of that are extreme anomalies. So what is the current platinum to gold ratio right now? 0.7. Very cheap for platinum. Now, it was down below a half. And this is where I was really starting to really load up. And when you know ratios, they can tell you value. I mean, obviously, they're not going to tell you the time that it's going to take for it to turn. They're not going to tell you those things. But if you tie it in with the commodities bull market, platinum loves to outperform in a commodities bull market. It is actually a signaling that stocks will underperform that platinum to gold ratio when platinum is outperforming gold. So it's actually an indicator that commodities are going to outperform stocks and that stocks are going to perform poorly using the platinum to gold ratio. So if you look at 0.7, you go back to this chart, it is way down here. It is cheap as can be. So it's still of great value, even though platinum's gone up a little bit. Next is the gold to copper ratio. And this also tells us a lot. When copper's outperforming gold, it tells us that a commodity bull market's going to be coming, especially with extreme outperformance. Now, if you look at this, we have a nice little trend line coming up here, right through here. And this was 2016. So that one, I think, broke to the downside. And then we came back up in 2020. I'll show you the real chart here. But look at the averages. I'd say a top is about anything over 500 is an extreme cheap price for copper. Anything below 300, you're starting to get more expensive. Now let's look at the real-time chart of the gold to copper ratio. Here's this uptrend. It broke. So we were actually, I would say, in a good starting of a bull market in 2016 for this chart line break. It did come back up and it peaked at 750. My Lord, that was cheap. Great time to buy copper was beginning of 2020 in those first and second half of 2020. Now we're coming back down. We broke out of this trend line here on the bottom, and it's looking fantastic for a commodity bull market to come because we got this alignment with platinum. We got the alignment with copper, silver's breaking and outperforming gold. We've got all of these, a confluence of information, a merging of information that's telling us that a bull market is coming. And this right here is extremely cheap still at 481 because remember I said 500 is extremely cheap. We're still at extreme valuations to the cheap side, to the undervalued side. So it's okay to buy any of this stuff, in my opinion, based off of ratio analysis. Now let's look at some of the currencies because typically in commodity bull markets, currencies, especially the dollar, gets weak. So one way that we can look at this is we look at the dollar-Swiss ratio. This is dollar in relationship to Swiss francs. And the last commodity bull market I have here, it is between this area here. And you could see a weakening of the dollar. This was when the commodities were extremely undervalued. They had to strengthen a little bit before the dollar really started to lose purchasing power. And then they through an overvalued, this is the commodity to S&P 500 ratio. which is commodity to stocks ratio, through an overvalued here, so you'd want to get out. And then it had one last push down where gold and silver really took off till 2011. We had a sideways movement going to the right-hand side here between 2011 and I'd say about 2019, 2020. And then we broke to the downside, signaling another bull market in commodities is coming. We were throwing buy signs in here for commodity valuations being cheap. And now the dollar's underperforming the Swiss franc, showing weakness in the dollar, which is most likely a commodity bull market that's going to come. Now the dollar just straight up broke its uptrend here to the downside, and we are heading lower. More information telling us that the dollar's weak. This was the last bull market down here in commodities. You could see the dollar was really weak. And more information, more confluence of saying that a commodity bull market's coming. We're in a real estate expansion phase. Typically in a real estate expansion phase, you have a weak dollar. And if you tie history, if you tie real estate and the real estate cycles, whenever we hit expansion phases and commodities are cheap, that's typically when you have a commodities bull market. It happened in the 70s. It happened in 2000 to 2008. Those were all expansion phases in real estate. And it's happening today. We are just entering an expansion phase in real estate, and commodities are cheap. So I think that a commodity bull market is coming. I think that the channel is positioned very well. I think we've picked a lot of very good, we'll call it metals, materials, energy. All those things will do fantastic because of their valuations, because of the market conditions. And we're seeing that the ratios are telling us that it's coming. So it's all in alignment. Good for us that we know this stuff. So I want to make sure that everyone, if you're a new subscriber, that you know some of this stuff. It helps you hold the investments that you're in, knowing that this is the tailwinds behind your investments. So this is the ratio update. Subscribe to the channel if you haven't subscribed already. Give me thumbs up. In the comments section, leave some comments. What do you think about the commodity bull market that's coming up? What do you hold? What do you want to buy? If you don't have it already, what are you looking at? Let me know in the comment section. I'm always interested to hear from everybody. And thank you for listening. This is Finding Value.